If you're into growth stocks and a long-term investor, you might have realized that buying a stock is a lot like marriage, through thick and thin. Even when the going is bad, in sickness and in health, you hold. But when things go south, how far are you willing to hold the line? Welcome to Wealth Gambit. On this channel, we cover all the latest stock trends and news. And shouts out to our guy Jimmy Jim who requested this video. We appreciate your constant support for the channel. Now let's get back to this anti-fraud tech stock. Riskified began trading last July 29th, starting at $21 per share at its IPO. Just to give you a quick recap, this firm aims to give security to its clients with softwares that make e-commerce transactions more legit and make sure online sellers are really getting their money from trusted customers. But from its all-time high of $40.48 a share down to around $8 today, Riskified is now moving down the drain as more investors are backing out even before it realizes a profit. What seems to be the problem is when it reported a strong balance sheet with more than $120 million in cash and no long-term debt during its Q2 2021 earnings call. By the way, we just covered Riskified a few months ago. If you want to check it out, just click the link below. Despite recording a 26% year-over-year growth in revenue, investors don't seem to be too happy with these results as they are more concerned with the growing net loss during the third quarter. From about $10.7 million loss for the 3 months ending September 30th, 2020 to around $86.8 million loss this quarter, this was because of the non-recurring non-cash charges related to the remeasurement of convertible preferred share warrants with the IPO last July. The company expects to earn roughly $226 to $227 million in the last quarter of the year, revising their full year guidance previously announced from about $224 to $225 million. Even when the company's revenues exceed expectations, the stock still took a dive off a cliff after analysts slashed their price targets on Riskified due to concerns about the company's decline in reported gross profit margin. From about 52.8%, it's now down to 46.2% compared to last year. According to sources, the technology or software used is still in question for most investors out there. Right now, analysts on Tipranks are putting their price targets between $15 to $25 per share. Riskified is trying to revolutionize the fraud management industry, and although the goal is large, so are the expenses that come along with it. These massive expenses have caused analysts and investors to get a little queasy, but if they can handle the bumpy ride, then Riskified may be able to carry them to the promised land of fraud-free e-commerce marketplace and profitability. That about wraps it up for today's video, guys. What do you think about Riskified? Do you think they'll bounce back after this bump in the road? Let us know whether or not you plan to buy the Riskified dip, and if so, how many shares. Best comment gets shouted out in the next video. Until next time, peace.